Hey guys, what's up? This is Stock Retail coming back to you. Excited to finally do this forecast video that I've promised for quite a while. Just had prioritized a few other topics first, and the Thanksgiving holiday and some things like that. So here we are, finally going to review. I will go through actually a lot here. I'm going to go through Q4. So we have kind of the shorter term forecast. What are we looking at right now? I'm going to go through all of 2024. Full year view because we've got enough level of detail on what movies are out and when. That's going to include some discussion on what the strike impacts are and how I see Adam and team's response to that. So we'll go through that. And then I'm going to point us farther out as well. I know that could sound like a long ways out, but I think what we want to continue to check on is our thesis. Our thesis is this company is not going bankrupt. This company is moving towards a season in history where it's going to thrive. And if apes stick around, then the shorts eventually will be forced to cover because of the success of the apes and the success of this business. So I want to give you the longer term forecast and check in on the thesis. So that's why we got to look out that far. As always, I say kind of DD, research, understanding is the anti-FUD. And so we're going to have to look at the numbers themselves because they tell a story. And here's the story you're going to see. I'm going to give you a little bit of, frankly, the outline of this video because I'm going to be very real about some of the strike impacts and things, but I want you to hear my bullishness coming through that as well. And frankly, the success on how well this management team has done. So what you're going to see is I still believe there is just not even a discussion on bankruptcy. That's just off the table. We're sitting very well. I'm not concerned about that. Now, it's a company that needs cash flows, right? And if you're the leader of this company, your product went on strike for a long time. And so a lot of what you sell got delayed. So your response to that was you offset it to buy time. I want to remind you guys, and you're going to see through this video, the story on our thesis on this squeeze for AMC has always been about time. Time works against the shorts, in my opinion. It's in favor of the longs. If apes stick around, we win. That's just my point of view. So this management team responded with new product. We're going to kind of look at that story. And a cash infusion. That is dilution. That's the equity sale. So we're going to be honest about that and look at that. And as I said, it's still, in my opinion, if apes stay, apes win. So now the numbers are going to show us all of this. But that's the preview of what we're going through. I mentioned the anti-FUD is in sort of in the DD or in the details. I'm just going to breeze by this and kind of not have any drama or anything like that. But I am going to say, listen, there's people in particular that I see on Twitter at least who front themselves as being some kind of business experts who frankly on the regular show that they don't even know what they're talking about. And so I just want to continue to call you. You've heard me say this on my channel many times. Listen for voices of credibility, listen for voices of integrity. Someone can have integrity, that means being honest, and still be wrong. So that means they're not that credible. Someone can be credible, they know what they're talking about, but maybe be dishonest. I want you to find voices who have both credibility, they know what they're talking about, they generally get things right, and integrity. They're going to be honest with you. So what I'm showing you right here is like every single line in basically what I call the P&L or the income statement. I've told you before I have a spreadsheet that goes all the way back to 2018. For every single quarter, I look at every one of these items. Now, a few of these are my own, where I look at like attendance and food and beverage per attendee, or you can see I've got a line here for popcorn. I've got a line for candy, beer, and wine. I'm starting to make assumptions in the future about pieces of those businesses. But to get an accurate forecast, you have to understand every single one of these lines. And that's part of that credibility piece. I'm seeing people tossing out numbers for 2024 that it's just clear to me they haven't done the DD or they don't understand this, or they even maybe haven't looked at the list of movies, coming out. So we're going to go through that. I just invite you to stick with me. I understand that numbers videos are not great clickbait. I don't get as many clicks on these videos, but I don't do this for clicks. I do this to sort of be an anti-FUD channel and to share reality with you guys so that you cannot be misled. All right, so Q4, let's just get right to it. First off, if you don't know, the strike impacted like almost more than $500 million at the domestic box office. We had Ghostbusters push out, we had Dune 2 push out, we had Craven push out. There were others that were supposed to be in this quarter that had pushed out, right? So that was already a big impact, but that's where it was so thrilling, I'll even use that word, that Adam brought in Taylor Swift and Beyonce. He brought in distribution. He's grown popcorn. He's added candy. frankly, I guess I'm already kind of jumping to the bottom bullet here, but he saved the quarter. Like that was his leadership that frankly saved the quarter. Um, so I'm actually saying here in the middle, you can actually see my bottom line. I'm saying bottom line earnings of a negative 126, but you need to understand, well, a couple things. One is, while I say Adam saved the quarter, he couldn't save it all. We lost more than $500 million of the box office that was supposed to be in this quarter. So he did a great job saving what could have been a really lousy quarter and turning it into at least an okay quarter. But it didn't bring it all. But I also want you to see what's non-cash in these earnings. You got to understand. So let me go back. I mentioned you have to understand all of these items. Well, for instance, depreciation and amortization. That's an expense that's not a cash expense. We're going to talk again about goodwill impairment because you keep being misled by some folks on that. That's not a cash expense. So there's a few things like that you don't want to count. This NCM, this non-cash NCM exhibitor services agreement. It's like $9.5 million every quarter. I mean, even in the expense report, it says non-cash. So if you look at the total non-cash, that's $152 million of our expenses. A large portion of the expenses are not cash. That means there's no cash going out the door. Now, remember a minute ago I said, hey, I'm not concerned about bankruptcy. So you can do the quick math here and say, I'm suggesting it's a loss on the quarter, but it's not really a negative cash impact because the amount of non-cash expenses is greater than the loss itself, right? So you can kind of hear cash is okay. I'm not too worried about cash this quarter. And mainly distribution, popcorn, just having the concerts. So when I say concerts, we got to think two things, right? There's the actual exhibitor side of it, showing the movie. AMC got to make a lot of money on that. But then there's the distribution side, as you all know, also getting paid by others for them to show the movie. So the fact that we got the distribution, the concerts, the popcorn, the candy, all that basically saved our hide on cash. So yes, I'm saying this is the forecast. This is a negative 126 million on the bottom line. I'm going to take you through a little more, positive information. As I said, I'll show that to you, but I'm just giving you the bottom line already. Negative 126. But remember that 152 of the expenses are non-cash expenses. Basically, that just saves you on taxes. You get to write off all these expenses so that you don't have to pay taxes. That's kind of how it works. In America, kind of the theory is it should spur investment by companies. That's especially on that depreciation and amortization line. Okay, so just take away from here, yes, we go back to negative earnings this quarter, but I'm not concerned on cash because a large chunk of expenses are non-cash. So hey, about that goodwill impairment, I do believe there is going to be some. I never said there wouldn't be any. Go back, I shared recently, there's a video I did about 10 months ago. I've kind of posted that on Twitter. I mentioned it in a couple of comments on YouTube. But there's a video I did 10 months ago. The entire video is about goodwill impairment, showing you the accounting rules on that, showing you how that actually works, giving you sources on that so you don't have to trust me. I literally give you links in that video so you can go learn about the accounting rules. But just two things I really want you to take away. So the first here, it has nothing to do with the stock price. So there's a gentleman who works for Costco, and he has, frankly, as far as I can tell, no business background. I'm not going to speak about his profession because, frankly, all people equal, APE is kind of our acronym, right? And there are people who don't have a business background who do a fantastic job at DD. Some of you actually dig in and research. But by the same token, I would not personally be taking any financial information from someone who doesn't understand accounting rules. That's just someone trolling us. So just want you to know clearly, goodwill impairment has nothing to do with the stock price. Literally nothing. That's not how goodwill impairment is caused. And then again, it's a non-cash expense. I've been very clear. So kind of, that guy got that wrong. Let's just move on. But I just want you to know, when I give you this minus 126, I have that factored in, okay? Now, let's move to 2024 and think through what's really coming. I want to just give you the runway, the path forward, because that's the whole thesis, right? When is AMC going to profits? And how do we end the short thesis? All of that. So I used a whole bunch of sites. I combed the net. You can see here on the left, I looked at Movie Insider, Cinema Blend, Box Office Pro, Box Office Mojo, IMDb, firstshowing.net. These are all places where I went and looked at the entire list of movies coming out 2024. Now, it was a little harder this time because we had a lot of movement because of the strike. And so I also just went and dug on, hey, are these release dates actually true? Because you'll see on some of these sites I'm even mentioning here on the left, have incorrect movie release dates. Some of the movies that they show in 2024 have actually moved out to 2025. So that took some time to just make sure and get it right for you guys and for myself. But I just want you to know the level of detail. And so again, if someone's tossing out revenue numbers, some people who I think apes even view as sort of positive, and I'm just telling you I don't. There are some people tossing out numbers who I can tell either intentionally or unintentionally are giving you bad information. So you got to start with what are the actual movies coming out. Now, the rest, like, popcorn, candy, all that stuff, we all have our own assumptions, right? So you can have your own assumptions on that. But for the movies themselves, you need to know which movies are coming out and how that impacts our revenue. So you got to understand first, here is a list of movies that used to be in 2024 that since the strike have moved out. This is not a complete list either. I'm just showing you the biggest ones. So there was a big Pixar movie. There's a live action, Disney movie. Snow White moved out. Mission Impossible: Dead Reckoning moved out. Beyond the Spider-Verse, you know how successful that was this year. The Miles Morales cartoon. I went and saw it twice myself. They're awesome, but there's not going to be in 2024 as far as I can tell. Spider-Man 4 used to be there. That had moved out. Captain America, Blade. So, that Marvel's been kind of having some issues. They've moved some things out. Avatar 3 used to be at the end of the year. You know how big Avatar is. That moved out. Fantastic Four. So you can just see, on goes the list. And I don't mean to be overly negative, guys. I'm still here. I'm still holding. I still believe in this thesis. But you need to know the facts because, I've told you that in some ways, I think hopium is as bad as sort of giving you negative messages because people are giving you information, setting up hopes and expectations that don't end up happening. But there's still a lot to like about 2024. So that's where we're going to now round into a little more of the bullish conversation. But we will review the impact of the strike in terms of the numbers. But look at all these movies in 2024. And this is just kind of a sampling of some of the larger ones in my point of view. Obviously, Kingdom of the Planet of the Apes is one of the ones we're all most excited for. We get another Kong movie. I'm thrilled about that. Despicable Me 4, Mufasa, Inside Out 2, Venom, Dune, Sonic. Don't sleep on those. Those have actually been surprisingly big. Joker. There's a new Lord of the Rings movie for us Lord of the Rings nerd. And yes, I put myself in that list. And then Deadpool 3. That might be bonkers big. And with the rumors that, Taylor might even show up in that movie, that one might break the box office. So there is just so much to like in 2024. But you just have to understand, you don't just easily replace this list of movies if they move out. Now, the great news is they didn't just disappear. They moved into 2025. So we're going to get to that, but 2025 looks amazing. But 2024 had some impact. So let's go through that. Part of what this all connects to, I think some folks haven't been thinking through what it means to manage a movie company when like I said, your product goes on strike and what that means you have to do as a response. So people kind of, why did Adam do this dilution recently? Well, I'm going to walk you through what I think happened. Again, remember the numbers tell a story. That's how I started this video. There's a reason for that. I think the numbers are telling me what he did and why he did it. So first off, that list of movies that moved out and a few others, the strike impacted 2024. Look at this number, guys. Over $3.5 billion by my estimates. Actually, not just my estimates. I took these from a couple of those websites like IMDb and Box Office Pro. Some of these other websites out there will do their own movie estimates. And so I took a look at their estimates, thought through my own, and in most cases, I actually even went under their numbers. Like IMDb, I tend to find is a little over bullish sometimes. So this number could be even higher if you just straight up took the IMDb numbers, for example. So we're talking, $3 to $4 billion of the box office. That's like the entire size of 2021, I think, or maybe it was even 2022, 2021, I think. It's not small. I mean, this is an entire quarter plus. We've not had any quarter yet this big since, 2019. So take an entire quarter of movies out. Just poof, it's gone out of 2024. That's not easy to deal with that impact. So let's just look at what that meant. In terms of where I would have been in the forecast for you guys, that meant basically $1.8 billion of revenue that AMC is not going to get. So I'm going to do a walk to show you how Adam recovered a bunch of this, right? So hang in with me. This is not an over. In fact, this is going to be a very positive slide by the end. But you need to start with reality of what Adam had to manage through. So Hollywood goes on strike, $3.5 billion of box office. That's just domestic box office. I'm not even talking global. Disappears. The global impact to AMC, I am giving you global impact here, is by my forecasts about a $1.8 billion hit to the year. Now, part of that would have been expenses. So what I mean by that is the 1.8 billion is gross revenue, but AMC of course has expenses. There's a cost to concessions. There's a cost to selling merchandise. There's a cost to opening the doors and running the business. So the real net loss, so kind of the actual bottom line earnings impact, I've got that at $811 million. Think about that for a minute. Wipe out $811 million of earnings. You know, we just celebrated because Q3 we had what, positive 12.4? So think about $800 million of earnings from 2024 just gone because of the strike. So I think some folks are sleeping on how big the strike was and what a big impact it was. And now remember in the earnings call when Adam full on said, guys, the strike needs to end now. And about 4 hours later, the strike was over. I don't know. Thank you, Adam, for getting a little bit tough on that one. Appreciate it. All right, but now let's start to look at it more positively. So the real impact was that 811 million. So that's just the bottom of this red bar. We were losing $800 million of earnings. Now, I estimate for 2024, the net, so the earnings from popcorn, candy, wine, beer, obviously I'm making some assumptions. Frankly, I don't have almost anything for candy, wine, and beer, but I have some amount in there. I'm assuming we all, myself included, will enjoy buying some chocolate-covered AMC product that will add to their margins, basically, keep more money in-house. And I'd like to think that maybe by the end of 2024, we see beer or wine start to come out. And maybe growth in candy, who knows? Maybe we start to see it in grocery doors. And, we know that popcorn has already expanded to Amazon and Kroger and Publix and all of that. So just continued growth there. But you can see it's not like a huge impact. So the net impact of all of those is $60 million. Now that's Adam's doing, right? How did your management company do? Your management company added these revenue streams to bring back in basically had they not implemented these things, we would have not had this $60 million of earnings. So kudos to them for having done that. Then I've got my own forecasts. You might say they're conservative. I'll leave that up to you. But what is the incremental add to having perhaps some more concerts next year? And I'm just adding the incremental amount of we get the distribution money, we have kind of a higher market share and some other things like that, and more merch sales. So had Adam done nothing, there's another 50 million. So just the fact that he added these revenue streams, the concerts, the popcorn, the candy, the wine, the beer, assuming those come, just the fact that he's added new revenue streams saved us $110 million of earnings. Now, that's bottom line earnings after all the expenses and all that. So the revenue amount would have to be a lot bigger than that. Then if you add in dilution, think about it, was 690 million the last two rounds of dilution. You can see the net impact of the strike. We get back to zero basically. So I'm not actually suggesting that he sat and did the math and said, how do I get back to no impact from the strike? But if you look at it this way and you say, listen, the strike cost us $800 million next year. He added business lines that make up some of that. You got to make up the rest of it. You basically see that even with our dilution, we kind of just remove the impact of the strike. So you could easily make the case, again, the numbers tell a story, that he was just keeping us safe as a result of the strike. So some of you out there being really angry about dilution, you ought to be angry at Hollywood, and in particular the studios, in my opinion. I'm not looking at the actors and the writers. I think they had a just cause, in my opinion. So if you're an actor or a writer, I'm behind you, I support you. I think it was time for a little better revenue sharing model from the studios. But regardless, being angry at Adam for the strike and the impact of the strike and managing his business through the impact of the strike seems pretty misplaced to me. So I'm showing you a walk that basically says we lost 800 million out of the year. He added business, and the rest that he couldn't make up, he made it up through dilution. Yes, that happened. But without the strike, I don't think this would have happened. I don't think it has to do with our company having problems. I think it has to do with him making sure we get to that launch pad, right? He's going to make sure we get there. That's my point of view. So I think fantastic job. Job well done. But let's say that even simpler. So, I just said the strike impact was about 800 million. Through business moves, he, recuperated 110 of that. Dilution covered the rest and gave us the timeline to thrive. And by the way, now we're going to move to the real positive discussion as we look out and I give you the forecast for 2024. By the end of the year, not only are we back, we're better than ever. And then in 2025, it is just amazing looking. So let's start to kind of look at that. So the strike did slow us down, right? So if you just look, here's where we were going. Actually, let me just, you can see we were on this trajectory, this green arrow. So through this 12.3, these are actuals. These are our last 4 quarters of earnings, okay? And I told you for Q4, I've got us at a negative 126. Then you can see my 2024 forecast. So we have all of this here, this dip, this little blip for the, basically for a year is the impact of the strike. That happened. We got to deal with it. But you can see we're still looking fantastic. I've still got us, and again, this is actually based on the history of our expenses. You guys know how accurate I've been the last few quarters. Not just a few, a lot of quarters. There was a whole period of time where I was forecasting this and I wasn't speaking out loud about it because I didn't want to mislead anybody. I waited until I could see that I could do it accurately before I ever started publishing my forecasts. But I did this for a long time before I ever was sharing them with you guys. So you can see that by the end of the year, we almost 5x our bottom line, in my opinion, from this last quarter, which is far, far better than anything in 2019. So we're back on track. We just have this strike blip that we're going to live through for a little while. And what I want to go back and call you to is, if you recall, like one of my first videos I ever made. So if you're only on YouTube, just so you know, I've been on Twitter this whole 3-year journey. I've been an ape the whole way through. But, it was only like September-ish of 2022 that I started making YouTube videos. And it was just because I had more to say than you could fit in some tweets. And I got tired of typing it out on Reddit. Easier to just talk to you guys. So the very first video I made, a year ahead of time, I told you that Q2 and Q3, these 2 positive quarters, I told you those were going to be positive a year before they happened. And I just call back on that to sort of, let's go back to that idea of credibility. Can someone get things right? What I'm showing you out here a year in advance again is we're going to have an amazing Q4 next year, in my opinion. And now remember, I'm showing you these earnings numbers, and yes, those are negative, but recall how much is non-cash. So Adam has built the war chest. We got $1 billion in cash. I trust him on how he's going to manage that. If I had to guess, he's probably going to watch us go through Q1 and Q2 and wait until we start to see the recovery, and then maybe start paying off debt with some of that cash and those kinds of things. We'll see. I'm sure the banks are desperate for cash right now. They may give him a good enough deal on debt reduction that he does that sooner. But anyway, the path forward is just super, super clear. And by the end of next year, we are far, far ahead of where we are now. Okay? So it's still very bullish, but we are going to live through the impacts of this strike. It's going to be a little blip, sort of a speed bump on our path. So for Q4 24, I just told you how big that is, and then for 2025. So basically think about it as like there's a return of the box office. So consider this year, the box office was about 8.9 billion. In 2025, I got a feeling we're going to cross 10 billion. So we have this blip for 2024. Box office is actually down a little bit. I'm going to show you that too. But 2025, I think we get over 10 billion at the box office. Now consider by then we've grown popcorn more, we've grown the distribution more, candy, beer, wine. Perhaps Hycroft is starting to pull, metals out of the earth at a much higher rate. And now remember this middle bullet. AMC is a fixed cost model. Okay, so rents are pretty fixed, debt payments are fairly fixed and generally going down. There's other fixed overhead. When you have a fixed cost model, as your product comes back, I've talked about this in many videos, as movies increase, as we get more movies, AMC is far more profitable now than it was pre-COVID. That was also that first video I made more than a year ago now. I showed you that I could see in the fundamentals we're more profitable now than pre-COVID. And what happened in Q3? Remember that we beat 2019 earnings with far, far, far less movies. So that proved, again, what I'm telling you. I've done the research. We're more profitable now than pre-COVID. So great things are coming. Let's kind of continue to dig in so you can have sort of that anti-FUD for yourselves. Let's look at a yearly view. So in spite of the strike, earnings are improving, but we got to look at the box office first, right? So I am showing that dip in the box office. Here's 2024 versus 2023. We dip a bit, but overall, we're still trending the right way. So that's just that darn strike, which I think I highlighted here for you again. But now look at earnings. I'm actually showing that 2024, if you just compare it year over year, don't just compare it, versus the Q2 and Q3, these amazing quarters we just had. Compare it for the full year. 2024 is still an improvement over 2023. So even though the box office is dipping, there's the result of Adam implementing new business lines, popcorn, distribution, concerts, etc., etc. I've got some assumptions in the year around having some of those concerts. He has said his phone is ringing off the hook. So I don't think that's hopium. I think it's fair to put a forecast in for that. So the fact that he's diversified our revenue and reduced our debt, and by the way, you need to know there's also kind of been some reductions in depreciation and amortization over time. He has moved us to being more profitable. So imagine being able to increase your profits even though the box office dips and you're a movie company. That is sound management. They've positioned us and diversified us and managed the expense ledger, basically. So yearly revenue, here's AMC's yearly revenue. Here's where I kind of said, hey, you got people throwing out numbers that are not grounded in reality. And one or two of them are even, like I said, I'm not going to name names today because I just don't want to make this about drama. We're going to make it about DD. But I really want you to notice some people that supposedly are being stood up as these kind of, business experts who, in my point of view, just don't know what they're talking about. Look for voices of credibility, please. Doesn't mean I'm going to be right. I'm sure there's going to be I'm giving you a years out view. I'm going to be wrong about a lot of stuff, but at least I've taken the time to go through the level of detail that I've explained to you. Every item on the profit and loss, on the income statement. Every movie that's coming out. How's the popcorn business doing? All of that. So what I want you to notice, though, is I've got us basically flat on revenues. You can see just a tiny bit up next year on revenues, and most of that being a result of popcorn and the concert businesses and all of that. Notice here was the 2019 revenue line. So it's like, when do we get back to pre-COVID revenues? But remember that our expenses are actually now lower than pre-COVID. So if we get to pre-COVID revenues on lower expenses, that is why I'm showing you, if I go back, that our earnings are growing very fast. I mean, look at these numbers. I should have highlighted this. I'm saying in 2025, we end up like over $400 million bottom line, net income. And I'm showing the same thing in 2026. We jump all the way up over 700. So, you want to start talking about paying down debt, being solvent, maybe having dividends, maybe having stock buybacks. There is a time coming, guys, when this company is wildly profitable. And now I have the background, if you're new to my channel, you might not know. Sorry for those who've heard this a million times. I have 2 master's degrees in business, and I worked at a Dow Jones company for 21 years. I'm not just pulling numbers out of my rear here. There is a time coming when this company is not just profitable, but wildly profitable. I wouldn't be surprised if by 2027, there's $1 billion of profit. And by the way, again, I'm including all that non-cash stuff. So if you take out the non-cash expenses, then you got to put these numbers even higher in terms of cash flow in the future. This company is going to be printing cash. Adam's been setting us up. That's why I trust his dilution. I don't like it any more than you do, but I trust it more than some because he's making sure we get to the launch pad. He's delivering us there safely. Anyway, so you can see that I've got a view that in 2025, because of that increased box office, because over time we gain market share in popcorn, more distribution of concerts and other kind of content, we almost sniff 6 billion revenue. And then by 2026, well surpassing 6 billion in revenue. Okay, so really good things are coming. Yes, this is a pretty long-term view. I wish we were squeezing tomorrow. You can go back and view my videos on tokens and crypto and all that. There's still rumblings that I see and hear about things that could happen soon, but I just can't predict the day or the hour, so I'm sticking to fundamentals and telling you what's coming on that. But understand that I'm still holding and I'm still very, very bullish. All right, so here's some things you need to know in the fundamentals so that you cannot be misled. Remember that AMC has a heavy fixed cost model, which has been improving. So like the leases, the debt, these are things that don't flex very much. They kind of are stuck or fixed. That's why you call it fixed cost. And AMC has far greater operating leverage than in 2019. Remember that we've sort of sold off a lot of poorly performing properties, which, by the way, I think is related to the impairment charges. We brought in some great performing properties, so the overall mix is far more profitable than ever. And so what's the so what? So as the box office increases, earnings are actually going to increase faster than revenue. That's really good management and something I put on the scorecard I share with you guys. Like you want to see actually the bottom line growing faster than the top line. And I see that in these fundamentals. We're just waiting on movies to return. That's all it's ever been. But the thing is, Adam's hit the fast forward button by giving us other businesses in the meantime. So well done. AMC has diversified revenue. I guess I just said that. There's a lot of things that didn't even exist in 2019. So growth in popcorn distribution, exhibition of non-movies, candy, beer, wine, Zoom meetings, all of that is going to add to profitability that just doesn't even have a comparable from pre-COVID. So we're more profitable now is the point. And then AMC actually has lower debt than in 2019. So as debt is paid down, I believe more will happen. I believe we're at 8 out of the last 9 quarters that we've paid down debt. As debt is paid down, earnings will continue to improve because you're going to see the interest expense. Remember way back at the beginning, I showed you all those lines I look at. One of them is interest expense. That's going to start to go down. And so the runway continues to actually get longer for us and clearer. I use that language of a runway. Obviously, we all want a rocket ship, right? Like this is the squeeze to the moon. I still believe in that. I very much believe in that. There's a reason I've stayed around and been so passionate in this movement. That said, the reason I talk about a runway, it's just this idea, and it always has been from day one in AMC. Can AMC survive long enough to get to profitability? If you have a long enough runway, you can make a real big plane take off. It's just always been, is the runway long enough? And it just absolutely is for AMC. So that's the language I'm using there. That's all I mean by that we have the time to get this plane off the ground. So bottom line, end of 24, I showed you that AMC is back to profits. And we have, when I say runway, remember, we have this war chest of cash. We're sitting well positioned to deal with that blip from the strike. 2025, I said full year profits over 400. 2026, I just told you full year profits nearing 800. Holy cow, like we're moving. Just think about when I say 400 and 800, we just had a $12 million quarter, which if you could do that for the whole year, you're not even at 50. So I'm talking about like 8x. Take last quarter, our greatest quarter yet, multiply that by 8 and have 4 of those in the year. Just really, really fantastic stuff coming. And then double that again in 2026. And so, hey, there's a bonus. For those who say there's no path to profits, I mean, first of all, just look at our last 2 quarters. Hello, we just had 2 profitable quarters. And those were with half the movies of 2019. I want to say that again. We just had 2 profitable quarters with half or less than half of the movies we had in 2019. So I've said so many times here, what do you think happens now when we grow popcorn, we grow distribution, and more movies come back? I think we all know. Sorry, guys, if you're hearing my phone buzz, someone's probably trying to text me. Finally, rounding out to the end here. So in summary, the fundamentals are actually better than ever. What you're seeing in Q4 through Q3 of next year is just the delay caused by the strike. But that's delayed. It did not kill. significant profits. Those are coming. And there's 3 levels really coming that I'm showing you. There's Q4 of next year, which is going to be really fantastic. It'll be probably our best yet. But then 2025 is even far better than that. And then 2026 is even far, far better. By the time we get to that larger amount of debt due in 26, it will be very, very easy to, sorry, just putting my phone on airplane mode because it's buzzing away. It will be easy to refinance that debt. Either we'll have the money to pay it off or we'll have refinanced it. I have just zero concern about that. The people who try to scare you about that, there are not positive words for me to use right now to explain them. So I'm just going to start ignoring them, and I suggest you do too. Adam made the moves that Hollywood forced him to make. Guys, on some level, the strike forced his hand. I didn't want the dilution. You didn't want the dilution. But go back and look at that walk. Rewind this video. Look at the walk I showed you that shows you he didn't just sell for the sake of selling. He offset the impact of the strike. And now we have the runway to take off. He's set us up. I don't think we'll ever look back. We have the diversified revenues that have accelerated our recovery, so it's going to happen even faster than it would have. And that is a direct, praise of this management team. Like if we didn't have those revenue streams, we would not be recovering as fast. And that also cushioned some of the strike impacts. So as always, I like the stock and I trust our pilot. Let's go.